Hello and welcome to Hot Commodities. I'm Manisha Gupta. Let's start with spot gold prices, which made an all-time high at $1,917 an ounce. That's a rise of 16% alone in the month of August. Since then, we have seen a bit of but news to trade on the higher side. For more on the gold prices and where they could be headed from here on, let's go across to Jeffery Rhodes. He's Global Head Precious Metals, FC Stones, and he joins us from Thiruvananthapuram. Rhodes, Jeffery, hi. Where do you see the gold prices headed now? We have seen a bit of a correction come in today, 1% down at this point.
Well, as you say, the current market, the volatility is probably the most extreme that I've seen in 35 years in the gold industry, and I think we really are in a very dangerous point in gold's price history. To be honest with you, it's dangerous to be careful, to be cautious. This isn't a time to be taking any risk. In fact, the rally in gold to the all-time high of above 18, actually the opposite, actually version that's being of risk putting out dollar euro. Investors no longer trust politicians on either side of the Atlantic, and so we're seeing a flood of investment money into gold as a safe haven against more risky assets. It's entirely investor-driven fund activity, either pension funds or hedge funds, but definitely I wouldn't call it speculative, honestly. I would say what we're seeing is the opposite of speculative movement. It's rather insurance buying, just in case the world falls apart. You know, we've seen reports from two major US banks that are really talking about a real threat of double dip. If that happened, I think it would be a significant problem for the global financial system. People are extremely worried that we could see the interbank market start to close up as it did in the summer of 2008. And in that kind of scenario, we are seeing a flood of safe investment. This might be speculated, I must say. And in fact, what is current people are buying it. And this, for me, is a classic SIG sign, a classic indication is now actually terror.
Also, do you think the value, then how risk to see at this point?
About premium, I would look at what is the fair value for gold, and I've done a lot of work on this, and if you take the cost physically of digging gold out of the ground, exploring for the gold, HR, the Treasury departments, everything to do with a gold mining company, although you've got different prices around the world, the average is estimated at around about $8 an ounce. Now, any market that have a return to the investors and shareholders of 20%, that would give you a profit margin over fair value of $160. So it puts fair value for gold, including a healthy profit, around about $1,000. And so when you ask what is the risk premium, what is the value over and above fair value, I would say around $800, which gives lots of room on the downside once the market reverses.